Okay, Scott, you got one that it's too early to maybe have any kind of trend, but let's talk Slack here because now we've got options on the thing. It's one of the more exciting, I think, of the recent IPOs. It's all about the software. It's all about making businesses efficient. How do you want to get exposure to this?
Exactly, and like you said, there really is no trend yet, but I love this stock. I love it from a customer standpoint, usability. I love it from an upside potential in that I think this is right out of the gate a candidate that can be taken out from a Microsoft or even from an Amazon. I think it has that potential.
You can't beat them, buy them.
No doubt about it. And you know, Slack, I don't even know what it stands for. Searchable log of discombobulated something. I'm not even sure, but all I know is that it is an inner office workspace. I use it. I think it is one of the greatest products ever to hit the market.
Okay.
So what I want to do, I want upside exposure, but I also want to collect some premium. So what I'm looking to do is one of Kevin Hink's actual favorite type of trades is a stock replacement trade.
Okay.
So now that options are listed, I'm going out to August and I'm buying the deepest in the money call right now that's on the board, which is the October, not August. I'm going out to October. I'm buying the 25 strike call. Against that, I'm going to sell an upside call to generate some income. All right, so I'm going to sell the August 40 call against that. $15 wide call spread.
Okay.
Calendar, it's over a few months, but it's a diagonal because we're using different strikes. I get upside exposure. I'm going to collect some premium in the August. Okay, I can pay about $10.50 to do that. Now, that puts the stock, you know, with the 25 strike October call that I have, puts the stock right about where it is right now, 35, 36 as a break even, which I think is fair, at least based on, you know, how I've seen it trade.
Right.
When August rolls around, if the stock has gone up just a little bit, sitting right here, maybe gone up even more, I'll roll that option out and collect even more premium. But I think this gives an investor someone to look for some great cheap upside potential in a stock that to me really has takeout probabilities.
How do you gauge what you're paying for in volatility for a fairly new company?
You don't.
Okay.
And that's why I'm doing something very cautious here where I'm actually selling a little volatility. Okay. And I don't know if that vol is going up or down.
Right.
However, if the stock goes up, I'm getting that delta exposure that would make up for the volatility there. And that's why I'm structuring it like this.
Yeah, all right. Dan, real quickly, we got about 15 seconds here. The Netflix, I want to come back to because we talked about it before. It's still been in that range. You basically play that until there's a sign of it breaking.
Milk the cow.
All right, I like it. There we go. A 3-word answer from Dan Sheridan. I like it. Scott Bauer is the CEO of Prosper Trading Academy. Dan is the founder and CEO of Sheridan Options Mentoring. And Don Kaufman joining us, the CEO at Theo Trade. Really good stuff, guys. A nice setup here into the weekend. G20, but first we got to get through a bunch of programming.